Have you ever wondered why some stocks are called large cap, while others are known as mid cap or small cap? Is a large cap stock always safer? Can small cap stocks really make you rich? And why do experienced investors build their portfolios using a mix of all three? If you've ever felt confused by these terms, you're in the right place. By the end of this video, you'll understand exactly what market capitalization is, how stocks are classified, their risks, potential rewards, and which type might be the best fit for your investment goals. Let's make it simple. What is market capitalization? Before we talk about large cap, mid cap, and small cap stocks, let's understand one important term: market capitalization, often called market cap. Market cap represents the total value of a company's publicly traded shares. The formula is simple. Market cap, current share price, X, total outstanding shares. Let's use an example. Imagine a company has 10 million shares in the market. Each share is trading at 50. So 10 million at $50 equals 500 million. That means the company's market capitalization is 500 million. Think of market cap as the market's estimate of the company's overall size. Just like cities are classified as small towns, medium-sized cities, and large metropolitan areas, companies are also grouped based on their market value. Why does market cap matter? Many beginners focus only on the share price. For example, one company trades at $20 per share. Another trades at $500 per share. Most people assume the $500 stock belongs to a much bigger company. But that's not always true. The real measure of a company's size is its market capitalization, not its share price. A company with a $20 stock could actually be much larger than a company with a $500 stock if it has many more shares outstanding. That's why professional investors pay attention to market cap. Large cap stocks. Let's start with the giants. Large cap companies are the biggest businesses in the stock market. These are usually well-established companies with strong financial performance, global operations, and trusted brands. Examples include companies like Apple, Microsoft, Alphabet, Amazon, and Johnson & Johnson. These businesses have been around for years and often dominate their industries. Advantages of large cap stocks. First, they're generally more stable. Because these companies are already mature, they tend to experience less dramatic price swings. Second, many large cap companies pay regular dividends. That means investors receive income even if they don't sell their shares. Third, they're often more resilient during economic downturns. Even when markets fall, strong companies usually recover faster. Finally, they're highly liquid. Millions of shares trade every day, making it easy to buy or sell. Disadvantages. However, there's a trade-off. Large companies usually grow more slowly. A company worth hundreds of billions of dollars can't easily double in size. So while they're considered safer, they may not deliver explosive returns. Real-life example. Imagine two vehicles. A huge cargo ship takes time to change direction. It's stable and dependable. A small speedboat can move quickly, but is also affected by every wave. Large cap companies are like that cargo ship. Mid cap stocks. Now let's move to the middle. Mid cap companies are businesses that have already proven themselves, but still have significant room to grow. They're no longer startups, yet they haven't reached the size of industry giants. Many successful companies were once mid-cap stocks before becoming household names. Advantages. Mid-cap stocks often offer a balance between growth and stability. These companies may expand into new markets, launch innovative products, or increase profits at a faster pace than large companies. They usually have stronger financial foundations than small-cap businesses, while still offering attractive growth opportunities. Risks. Since they're still growing, they can experience greater price volatility than large cap stocks. Economic slowdowns can also affect them more significantly. Simple analogy. Think of a teenager who has already learned to walk and run but is still growing. That's a mid-cap company. It has potential but hasn't reached full maturity. Small cap stocks. Now let's talk about the smallest companies. Small cap stocks belong to businesses with relatively low market capitalization. Many of these companies are young, innovative, and focused on rapid expansion. Some operate in new industries or emerging technologies. Biggest advantage. Their greatest strength is growth potential. If a small company succeeds, investors could see impressive returns over the long term. Many of today's biggest corporations started as small cap businesses decades ago. Biggest risks, but higher rewards come with higher risks. Small cap companies usually have limited financial resources. Their profits may fluctuate. Competition can be intense. Economic downturns may hit them harder. Their stock prices often move sharply in both directions. Some businesses succeed spectacularly. Others fail completely. Easy example, imagine planting a seed. If you take good care of it, it could grow into a massive tree. But there's no guarantee. Some seeds never grow. Small cap investing works in a similar way. Large cap versus mid cap versus small cap. Let's compare them. Large cap, lowest risk, stable earnings. Moderate returns. Best for conservative investors. Often pays dividends. Mid cap, moderate risk. Good growth potential. Balanced investment option. Suitable for long-term investors. Small cap. Highest risk. Highest potential returns. More volatile. Suitable for investors with a higher risk tolerance. Which one should you choose? The answer depends on your investment goals. If your priority is protecting your money and earning steady returns, large cap stocks may be suitable. If you're comfortable with moderate risk and want better growth opportunities, mid-cap stocks can be a great choice. If you're investing for the long term and can tolerate significant market fluctuations, small-cap stocks may offer higher growth potential. There isn't a single best category. The best choice depends on your financial goals, investment timeline, and comfort with risk. Should you invest in all three? Many experienced investors don't choose just one category. Instead, they diversify. For example, around 50-60% in large cap stocks for stability, around 20-30% in mid cap stocks for growth, around 10-20% in small cap stocks for higher return potential. This approach helps balance risk while creating opportunities for long-term wealth creation. Remember, this is only an example, not a fixed rule. Your ideal allocation depends on your personal financial situation and investment objectives. Common mistakes. Beginners many new investors make these mistakes. Buying only small cap stocks because they hope to get rich quickly, ignoring company fundamentals and focusing only on recent price movements. Panic selling during market corrections. Investing based on social media hype, not diversifying their portfolio. Successful investing is about patience, research, and discipline, not chasing shortcuts. Market capitalization is one of the simplest yet most important concepts every investor should understand. Large cap stocks provide stability. Mid cap stocks offer a balance between safety and growth. Small cap stocks bring exciting opportunities but also greater risks. No single category is perfect. The smartest investors understand the strengths and weaknesses of each and build diversified portfolios based on their own goals. Before investing in any company, always research its financial health, business model, competitive position, and future growth prospects. Invest with knowledge, not emotion. If this video helped you finally understand the difference between large cap, mid cap, and small cap stocks, give it a thumbs up and share it with someone who's just starting their investment journey. Subscribe to BNR Universe for beginner-friendly investing, stock market education, personal finance tips, and wealth-building strategies explained in simple language. And in the comments below, tell us, which type of stocks do you prefer? Large cap, mid cap, or small cap? And why? Thanks for watching, and we'll see you in the next video. Happy investing! Disclaimer: this video is intended for educational and informational purposes only and should not be considered financial or investment advice. Investments in the stock market are subject to market risks. Always conduct your own research or consult a qualified financial advisor before making any investment decisions. Past performance does not guarantee future results.